There we go.
Hello, everybody, and welcome. I'm Bonnie Halper. I write the weekly Startup One Stop newsletter and work with founders on whatever they need, their strategy, branding, their pitch decks, introductions to strategic partners or investors, I should say. And every 2 weeks, we host our online insights with a different investor each time. And um, I want to thank Joseph for hosting us. Joseph, tell us about you, and I'll put my contact information in the chat.
Fun. Morning, everyone. I'll keep this short. Everyone can please, if they want, put their contact info in the chat as well, so we can stay in touch. I help startups go from unknown to well-known, from building traction to scalable growth. Most early-stage companies don't lack effort. They lack disciplined growth systems. So I spent the last, let's just say 15 plus years helping executive teams align their marketing with revenue and building engines at scale. So happy to chat more about that at any time, but I'll put my information in the chat.
And apologies that you can't see me this time. I'm having camera issues. So this time, our guest is once again Sallie Jian, who was named one of the top women VCs in the industry, which we knew way before that, and by Business Insider. So Sallie, tell us. Sallie has been our guest before, but now she's with Alumni Ventures. Sallie, she was with Diageo before. Sallie, tell us a little bit about you and your background and how you got to this esteemed position, which we always knew you deserved.
Thank you. I think it wasn't that's a very nice intro, but I think it was just like a nice acknowledgement from Business Insider. It wasn't like a ranking. So let me just give you my quick background. I'm from the West Coast. I went to Berkeley for my undergrad, and I was a business major. I graduated and started investment banking in Silicon Valley. So I launched my career into traditional financial services, and I covered technology and investment banking out there. So I was covering accounts like LinkedIn, eBay, Facebook, etc. So I had this early exposure in my career to different types of financings, IPOs, M&A transactions at the outset of my career. That was a good foundation to then the next step where I moved to New York. And I worked at a growth equity firm, also focused on
That's
technology businesses. So I was there as also for 2 years in their associate program. And then I joined a couple startups and launched my career into venture capital. So I've been a venture for about a decade. And throughout that time, I've led some different venture teams. And then the last two roles previous to starting at Alumni Ventures were in corporate VC. And corporate VC is just VC arm of a large corporation. And
SAP.
yeah, so it was SAP and then Diageo before I moved into Alumni Ventures. And SAP, pretty much everyone knows, is
Yeah.
one of the largest software companies in the world. And everyone who, yeah, like pretty much, 90, I think 97% of the Global 5,000 use SAP in some way, whether it's for HR or sales and marketing tools for their bread and butter and ERP around logistics, inventory, um, enterprise resource planning, etc., to supply chain to yeah, everything. So they did everything. And that was a great exposure because it allowed me to I launched the Ventures and Accelerator program in New York for SAP, and it allowed me to just like scope a breadth of enterprise software businesses, and got to touch, research, everything. And I sat very much as like an investor operator with the startups there. I not only was sourcing them, looking at them for deals and partnerships. I was also sitting alongside them, thinking through like their go-to-market strategy, their business product strategy, and making introductions to my network of investors and operators. So it was a very operator also heavy role, which was great to be involved deeply with them. And then I joined Diageo to help run the ventures initiative in North America. And Diageo is an alcohol, the largest global spirits conglomerate, owning over 200 brands like Guinness and Johnny Walker. And that was different because I had been in tech my whole career until Diageo, and Diageo was very consumer oriented. So that was a good kind of flip in my experience. And then now I'm back into more of a technology investment role at Alumni Ventures, where I joined as a partner last fall. And I mostly invest in enterprise and B2B2C, Series A, um, at the pretty much at the earliest stage, Series A, all the way to like Series D, E growth stages. So I'm covering a lot of some of the later stage companies that we would invest in.
Oh, thank you. Now we'll have our attendees introduce themselves. Damien, tell us a little bit about you.
Well, good
And
morning,
we always
everyone.
do keep intros short.
Excellent. Good morning, everyone. I'm Damien Christensen from Chicago, and I'm helping as a finder with connecting founders and funders together. I also do a lot of work with AI governance, helping businesses go through and clarify their roadmaps so they can navigate through AI with clarity. So back to you, Bonnie.
Oh, thank you. John, welcome and tell us about you and what you're doing.
Good morning. Hi, Bonnie. I'm John Kaler. I'm the CEO of Cine, which is developing an app and infrastructure to crowdsource videos, especially at events and concerts and such. And while we're pre-seed, we're on the road to starting to get some real funding to make this project go.
Oh, congratulations.
Thank you.
Sam, always good to see you, Sam. Where are you?
Hi.
You're back in New York. That's right.
Back in New York, Upper West Side, yes, and great to be here. Yeah, so I'm running a software company also in the video space. We do media management software for people who have large amounts of video, typically corporates or governments. We do a lot with universities and churches as well, a little bit with broadcasters. Uh, I've become kind of an M&A specialist despite my best intentions. So we're working on two acquisitions right now, both of which are larger than our company. And so we're going to end up, even if one of them comes through, we'll be about 3 times bigger, but we're probably going to close both of them and be about 5 times bigger than we are. We did about 1.2 million in revenue last year. And so my life is consumed right now with lawyers and accountants, which I wouldn't have thought I would enjoy, but I'm actually at least enjoying the prospect of getting through it.
Oh, thank you. Ian.
Yeah, morning, everybody. Thanks, Bonnie. So, Ian Garmaze, I'm in Toronto. I work for a company in LA called Virtual Film School, and we just returned to our old business from 12 years ago of creating short, funny SNL style videos for marketing purposes for growing companies and large companies. So, and I'll put my contact info in the chat.
Andrew Bala. Wow, it's been a long time and welcome.
Thank you. It's really good to hear your voice. And I've been enjoying all your newsletters and have been keeping up with your ventures. And so I appreciate being here. I have been in the New York market for the last 25 years. I am a sales executive. My sweet spot is coming into Series B and C companies and being sort of the sales leader operator, putting go-to-market strategies for scaling the business and then right-sizing teams and preparing many, many companies for exit. I cut my teeth at DoubleClick right before Google bought them. I was there for a year after the acquisition was finalized. And in the recent history, I've been working with content tech platforms, most recently Prime Focus Technologies, which is an AI company designed to monetize big content archives. So I have a diverse background, and I just really need to keep a handle on what's going on in the market and hear from other leaders. So that's why I'm here today.
And you have to always mention AI in anything. Always make sure AI is included somewhere in a statement. That's true.
It is true.
Yeah. Joseph.
Hey, Bonnie, thank you again so much for hosting. Really enjoy these. I'm currently at work, so I apologize for the attire. But yeah, when I'm not at work, I'm building Vital Element, which you see behind me. It is an immersive AI, there you go, native
See?
AI for vertical platform for wellness. Basically, Ready Player One, but instead of apocalyptic, we're talking for wellness by controlling millions of different immersions, all built around different wellness modalities.
Oh, everybody's popping out. Omen, welcome.
Hello. Good morning, everyone. Thanks to Ian to invite me to this event. I'm founder of a medtech or age tech startup, I rather say, in Toronto. We developed a solution to prevent bed sores or pressure injuries for senior people. It's a digital or smart mattress cover with lots of sensors on it, shows the map of the body in real time, and provide instructions for repositioning the senior people. Currently, we are trying to raise our seed round, and at the same time, we are entering the market hopefully in April with 2 clients that we have who are home care agencies in Ontario.
Oh,
Glad to be here. Thank you.
Congratulations. Sallie, take it away. So do we have any questions? We always open it up to Q&A.
No, well, I mean, I have a question. I just watched a video about the SaaS apocalypse, which probably most of us have heard of.
Yes.
You know, whereby a lot of established SaaS firms, including SAP, but others as well, seem to have been hurt by Anthropic's recent announcements of their, applied business capabilities. So I'm curious as to how you respond to this news or this feeling that there's a change in the air in SaaS. Sallie.
Yeah. Also, I think everyone should feel free to chime in. I don't think my opinion is the end all be all. So, I mean, I think, yeah, it's affecting SaaS players in different ways, and it really depends on their business and business models, how much of moat they've created over the years. Big players like SAP or Salesforce, and those will never go away. They're platforms. They have large ecosystems of partners, developers, tools, systems that there's just no way they're large multi-billion-dollar enterprises can they're very sticky solutions. So there's just no way that these companies can really come off of SAP, like a company like SAP. Maybe they're going to strip away slowly at some of the point solutions or the vertical solutions with some of the newer players or some of the new solutions coming out, or even vibe coded solutions, but they're in terms of how robust their systems are and how many kind of integrations and products and tools they're creating. The big guys, they're safe for now. Maybe there's going to be some AI, like top AI companies that are going to start to chip away, but I don't see that happening like anytime soon. I think the market reacts too quickly to some pieces of news, and they all kind of follow. Everyone kind of follows like the trends in the market. One stock is down, shareholders of another stock will start to feel pressure and then try to there's going to be big headlines, obviously over the next few years that are going to drive the markets kind of crazy. But it's going to take a long time for new players or AI companies to like really displace these guys.
Sorry about that. That video was playing. I was reading an article today that there's only been an 11% adoption among corporations
Of what? Of AI
of
tools?
in SaaS of AI. I'm sorry. So they say
Yeah.
it's taking. Oh, sorry about that. I muted it. Sorry about that. That was your video, Ian. So yeah, people are paying attention to the street, but it seems something else is happening
But
out there in corporate
there's
America.
also another study that shows that 80% of employees are using AI, are looking to be using AI and are using it. So there's a disconnect as to, and that goes to the term shadow AI, which is a play off of shadow IT back when people used to first bring PCs into the office without IT support and approval. I think AI is still coming in. The easiest way to slide AI in is just go through and if you've got a cell phone and then you go through and ask it. So there's an interesting disconnect there, but we've seen that disconnect before. And even around SaaS products, a number of people have been choosing SaaS solutions. Obviously they're not going to implement an SAP without IT knowing about it. But there's a whole lot of other SaaS tools that people can be implementing, and by the same token, they can be walking away from. But I agree with Sally's point is some of the stuff is really sticky once you get it deep ingrained, and some of
Right.
it's not so deep ingrained.
Yet, speaking of which, I'd seen another article where companies who had fired their senior management in favor of AI were bringing a lot of them back at a reduced salary because it wasn't ready for prime time yet. It still needed human oversight.
Right. Yeah, that's a good point too. A lot of these AI tools are prone to mistakes, are hallucinations. They have maybe short-term memories. They're not accessing the right database. There's a lot of like guardrails that aren't there in place that large enterprise customers would be willing to just completely use and displace what they already trust and spent millions of dollars and time on. So yeah, a lot of these companies are just, yeah, they're coming online, but they're not ready for enterprise. Most of these tools are not enterprise grade, that's for sure. But to Damien's point, yeah, a lot of the best AI tools are product-led growth tools that individual engineers and product managers will start to pick up because it helps them with their workflows.
Right.
Um, but that doesn't mean that there's going to be like a formal large adoption across their organizations.
So next question or point?
Well, I mean, I agree with most of what you said, Sally, but one of the points that the fellow made in this article, I think his name is Streeter, is that he's an investor, VC, and in his opinion, most investors do not have a very deep understanding of
Right.
either traditional SaaS software or AI for that matter. And so, in a sense, they're making investments without really fully understanding what the real workings of the tools are. I mean, how do you respond to that?
Um, yeah, I think that's probably right. There's a lot of VCs out there that what what they do have are these large technical teams or
Right.
experts on their teams. Yeah, like most VCs are not developers, engineers. They've never actually done that level of work. But they're relying on these special domain experts to like do do product demos, review them. They're relying on customer testimonies. They're relying on signals like where did these teams come from? What have they built before? And what are they capable of? Um, and then obviously like also thinking through what are the big challenges in today's world that these companies are solving for. Um, and if they're truly like able to do it. And if they're truly able to do it, they're going to have customers. They're going to have revenue. They're going to have growth. They're going to have um, you know, growth that's not just like uh, temporary, like pilot type of growth, but growth that comes from pilots converting into contracts to converting into expanded land and expand contracts to just this sort of like these exponential kind of growth, those growth metrics. That's what VCs rely on. It's like a lot of like the numbers. So the numbers don't lie, even if they can't really, vet the product deeply.
When you mention these subject matter experts, and I work with founders and I make introductions to strategic partners and investors where and when appropriate, and I came upon one fund where I did know people in the investors in the fund, and yes, they said that they did have a focus on AI at the moment. And so I introduced them to one of my clients who has traction, who isn't just doing pilots. They have paid, not only do they have paid clients, but these clients are Fortune 100s and Fortune 50s, which is pretty amazing. And the person they had vet this company, and I was there, understood nothing about AI, was asking all the wrong questions. I mean, even though the numbers were there, it was a complete disconnect. So why, I know it's an aphrodisiac and every VC wants to look at AI companies, but have a real somebody who understands it. Otherwise, why waste time? But it seems like they're all jumping in anyway. And I'm sure you found that as well, Sallie, right? Or have encountered people in funds who say that they know AI, but they don't.
Yeah, I mean, I also, yeah, like the kind of the hyper growth
Right.
and changes of this industry. No one is really an expert. Like you can be, you know, anyone who's doing this, they're an expert. Maybe they're not an expert. You've only done it for 2 years. Like LLMs have really come online
Right.
last 2 years. None of this stuff even worked 2 years ago. So no one is an expert, which is so anyone is claiming to be an expert, they're, maybe they kind of are ahead of the curve, but only, 2 years ahead of the curve.
Right.
So yeah, I think like the smartest people on this topics, even they'll say, things are changing so quickly that they can't really be truly experts in this.
That's true. And according to Matt Schumer's piece last week, everybody needs to know it. It's really taking over. And there's some truth to that, with some caveats. So considering that it's scraping what's on the internet, and not everything on the internet is true or valid or verified. So next question or point.
Well, I had a point, but Damien politely has had his hand up, and so I figured he should go first.
Well, Sallie kind of covered what I was trying to communicate, but I want to share it from a slightly different old man perspective. When PCs were first coming out, you would go to a trade show and see what was going to be coming out 9 months ahead of time. And even now, when you go to, Apple Day or NVIDIA, they're still talking about what's going to be coming out, 3 quarters away from now. And I think what's shifted is that, with a lot of AI products, they're bringing out something that's and releasing it as ready for prime time that they just built in the last 2 weeks. And that whole shift is monumental, because even when PCs were coming out, you know, a year ahead of time, that was phenomenally faster than what Detroit was coming out with cars that were 3 years in advance. That when you go to the auto shows, and we just finished up our auto show here in Chicago, and as it rotates around the country, that's showing ideas that are 3 years in advance. And so when analysts go through and take a look at that, they're like, okay, next month I got to go through and take a look at this and see, you know, is that technology that they're showing at the car show really viable? Do they actually have the batteries that they're trying to, you know, and people will spend months analyzing what's likely to come out in another year. Whereas now with the AI, we're looking at stuff that's coming out, and literally you're measuring it in development time of hours. And a
Yes.
lot of times it's because stuff is coming out so fast. So I think, to Sallie's point, they're not looking at supply chains, and they're not looking at, you know, is it properly grounded, and does it follow NIST and cybersecurity protocols, and all these different things that for it to be ready for enterprise, nobody's taking the time to take a look at, because people feel like they need to do it in order to be competitive. And so the world is changing at such a fast pace, and people are recognizing there's great opportunity in speed, but there's an incredible risk with that speed as well too.
Yes.
So thoughts?
Especially with vibe coding, there is absolutely no cybersecurity in there. They don't even consider, you know, traditional founders don't even consider cybersecurity. It's an afterthought. Cybersecurity should be day one.
Well, it's I've seen a lot of products that they sat there and said, we designed for cybersecurity from day one, and of course, granted, a lot of these are in the cybersecurity industry, but it's interesting to see even when they say we designed for this from day one, how they still are looking at it through a selected lens. They're looking at it from cybersecurity around, say, maybe DLP, digital loss prevention, but they're not looking at it from packet state. There's so many dimensions of risk to consider and evaluate against, that it's really hard for anybody to even know what they're not looking at, because most people don't have a broad enough background in risk management. Even attorneys and lawyers, even though that's most of what they're trained in my mind.
Yes, and speaking of Claudebot, I know his partner. And trust me, they don't know cybersecurity. They don't even think about it. I know them. So anyway, Sallie?
It certainly sounds like people are jumping on the bandwagon of this ubiquitous term AI, but there are so many different applications. And I think what smart investors need to figure out is what's the market bifurcation. There's B2C, there's B2B. There are platforms that are already in the market and have been utilized. So I think it's really what isn't in the market and what hasn't been definitively done outside of what Google, AWS, and Microsoft are developing at the higher level. I think when selling AI platforms, which is primarily what I've done, I mean, if you think about it, agentic, we weren't even really seriously talking about that 3 years ago. You know, it was still sort of an idea, and everyone in the industry knew it would come. But when you're talking about integrating an AI platform or tools, it takes so many decision makers. It takes testing, probably 6 months of testing and scope creep on all of those tests. It makes the sales cycle incredibly expanded. And then once you price it, the commercials are very, very, like it's a sticker shock in terms of how expensive AI is to actually deliver what it means to deliver. And then once it is implemented, it's probably a year of learning before it is really on an enterprise level providing the output. It still needs to be co-piloted though. So there's still, like, for humans to be there, it's still for the more strategic thinking and the things that are really going to move the needle for the business from a strategic point of view. I don't see it coming in and supplanting anyone anytime soon.
So Sally, I have a question for you, and okay, yeah, and since I do know that you do Series A, later series, but Alumni Ventures looks at earlier, earlier ventures, earlier startups. How do they feel about single founders? Because traditionally tech has wanted at least two founders, two co-founders, but AI is changing all of that, especially with vibe coding. Has that changed anything at Alumni Ventures that you've noticed or that you can comment on?
I think, yeah, traditionally there has been more of an interest in multiple co-founders rather than solo. Yeah, that was kind of the narrative of what VCs are looking for a few years ago. But
Right.
I'm not hearing that as much now. So I think it is because these really technical founders can build incredible businesses with these AI coding tools that like not even like double, like 10x their productivity. So it's like they have 10 engineers rather than one. And that frees up a lot of their time to then focus on the distribution and sales and marketing and talking to investors and whatever else is needed in addition to the technical aspects of the business. So I think yeah, there's definitely some with these tools. It does definitely seems like having multiple founders is not like as much of a criteria as it used to be. I haven't like I don't know what the studies are of what what's actually getting funded solo versus multiple, but it's not something like I think about anymore. Whereas I remember like a few years ago, there's certain VCs that would say I don't really look at and like Y Combinator, for example,
Right.
they don't really do they were pretty, I think, gung-ho about multiple founders on founding teams. Um, I don't know like what the demographic is of their founding teams now, but I would guess it's probably, solo founder companies probably have our larger proportion of their cohorts now.
Yeah, I had a feeling, but I was curious. We have a few people who arrived late, and I want to give them an opportunity to introduce themselves. Alex, why don't you introduce yourself?
Hey, good morning. Good to meet you, Sally, and everyone else. Um, I'm Alex. I'm a finance geek that's, for whatever reason, gotten into fintech as a founder. Um, and we're funny enough, our program is enterprise software, and it's an industry vertical, specialty lending, which we know well. And of course, it's AI native, but really it's machine learning, it's automation, etc. And we're sort of at the seed level. We're just about to turn revenue positive this quarter. But in terms of what you're seeing that's successful commercially and fundable, I know you're probably at later stages, but what's your thinking in terms of vertical, sector integration for software? Does that have traction?
Um, I mean, yes, like depends. I think there's definitely it depends on what you're doing and um, the industry and are some of these horizontal players how deeply they'll try to move into the space. Um, I don't know. That's a hard question because I don't really know your business and your customers, and so I can't really comment. Um, yeah, I don't want to like overstate something. I'm not sure what your business is.
Yeah, so we're B2B and basically looking to automate most of the workflow processes, which means you need to know what that workflow is, right?
Mm-hmm.
Um, and that is something that what we've seen is impossible to do by the larger players because each industry is so specific that you have to
Mm-hmm.
have deep industry expertise to know what you're coding in the first place, even with vibe coding, right? You need to know what the finished product is meant to do. And the only way you do that is if you've done it in the past, right? It's firsthand
Mm-hmm.
experience.
Mm-hmm.
Um, but in terms of what you're seeing broadly, like what kind of things get funded? Is it, you know, does it need revenue traction? Like what sort of
It
metrics
depends.
do you
It
look at?
it really depends. Well, what stage is your company?
We're seed, so we're at MVP, finishing the beta testing. We've got a pipeline of 40 odd clients, and the first ones are coming on this quarter in terms of actual paying post
Okay,
beta.
so you already raised a seed, or you're going to raise?
No, we're uh, we're going to raise the seed at the end of this quarter. We're not formally in the market yet. We
Okay,
would like to turn revenue positive before we do that.
that's good. Uh, yeah, a lot of the seed investors that I know, they're looking for either revenue at the seed stage now or up almost there
Yeah,
revenue or indicate like those pilots, pipeline, like almost ready to go, almost
yeah.
ready to monetize solutions or post revenue. So I would say that sounds like at a high level, sounds like about the right stage to go for a seed round.
hmm
Um, because yeah, now it's so much easier for companies to spin up something, get quick wins, quick kind of like uh, initial revenue. And a lot of the kind of what I mentioned earlier, a lot of the technical founders now can go and sell, and they've kind of freed up their time with the tools they're using, so they're able to ca- actually gain a significant amount of revenue in the first year. It's not like I think there's like some charts where it shows like it used to take companies, X number of months to get to million AR. Now it's like within a couple months. We got
Yeah.
there's the product are shipping and they're iterating on product. It's just getting so much exponentially better for with the tools they're using to like get something already live in the market that there's no
hmm
reason people would wait for VCs wouldn't be waiting for like years to see revenue unless you're like a you know hardware capex heavy kind of company that has like patents and IP or like in the healthcare space that you're really developing something that takes a lot of R&D
hmm
dollars and time. There, if it's like a vertical SaaS, vertical software, vertical AI type of
Yeah.
solution, like VCs are looking to see that you're able to quickly spin it and get the customer some product market fit already.
Okay. But in terms of, I mean, what you're seeing, that vertical SaaS, despite what you're seeing in the markets that we're talking about this morning, like everything's selling off because everyone thinks software is dead. Um, at the VC level, that hasn't come through in terms of interest in investment or
Well,
valuations,
I
or
think
has
I
it?
think people will say like they're not as interested in vertical SaaS or there's still people that say they are.
Mhm.
But a lot of I think VCs are like steering away from investing in vertical solutions, but a lot of these solutions are still, even if they're horizontal, a lot of them are still vertical solutions because they have a particular industry beachhead or they have a particular focus. And the market itself for, I think you said financial services, what you're doing.
Yeah.
It's huge. There's no reason to um try to do that and then try to do healthcare and then try to do,
Yep.
like retail. You can yeah, like the market itself that you're working on is big enough that you don't need to branch out. You don't have to call it a vertical solution if it helps with your sort of fundraising efforts.
Hmm.
But there's plenty of these horizontal solutions when they're majority, like there's some, like 75% of their clients will be in one industry. And that's fine. I don't see an issue with that, because everyone knows your seed stage, early stage. Um, and if you spread yourself across everything, try to do everything at once, it's just actually counterproductive at this stage.
Oh, absolutely. And also just from a sales cycle perspective, it's much easier to grow, by word of mouth in that same sector.
Yeah. And what
Um,
you're building out with the models is probably more repeatable if it's for same customer profile, same ICP, whatever. So
yeah.
you want to, at this point, you just want to show traction and rather than try to like, go too broad across too many industries. Yeah.
Yeah.
Angela, I wanted to give you a chance to introduce yourself too.
Thank you, Bonnie. Hi, everyone. Good morning. Good day. My name is Angela Scarlett. I'm calling in from Toronto. Thank you so much, Sally, for spending time with us. I just got here, but already I'm learning so much. And what I do is a couple of things. I am the lawyer in residence for University of Toronto Entrepreneurship. I'm also the legal mentor for their new venture program, as well as I have a couple of my own ventures. One of them is online incorporation, and the other one is advising enterprise clients on the use of AI. So thank you.
Well, that must be fun.
So far.
I want to bring up an issue because, working with founders, one of my most important questions is, what is your superpower? What is your defensible moat? And I see these companies where, it took them a week to code it and they're ready to, they're releasing it or they're ready to go for funding. What's their defensible moat? That does present a problem. Have you noticed that, Sally? Or any comments on
Yeah,
that?
yeah. I mean, I think especially in early stage, you don't have any moats.
Right.
Um, I think a moat is oftentimes identified later on in your business because it takes iterations over time, like like what OpenAI was in the beginning is not what it is now. So if they were pitching in the seed stage and they were saying these
Right.
are our moats, it's not the same as it is what actually is today, right? And today is they've got a moat. Today they've truly got the um, largest, them and Anthropic have the largest market share now. So now you can clearly, or maybe not so clearly, define their moat even today, but certainly not at the early stages. If the company is telling you, these are our moats at the early stage, they're all stipulations. Actually, I mean anything an seed stage company presents to you is really just stipulations, right? So their market isn't really defined. Their use cases aren't truly defined. Their ICPs and customers, their business model and price, none of it is. So um, these are just things that evolve over time, and a later stage company can start to say that our moats are this because they truly have use cases and customers and repeatability, um, and different types of products, solutions that they're selling that are now repeatable and expandable. So I think moats really come later on in the business once probably you know in the definitely not in the early stages. It's tough. Even if they've gotten like talent from some of the top AI companies, they're still figuring it out, I think.
Yeah, I hope they keep these issues in mind because my point is always like, well, if you develop this in 3 days, why couldn't anybody else doing vibe coding? Why couldn't someone else?
Yeah.
You need to at least think about it, and they don't often.
Mm-hmm. Mm-hmm.
Because they're so much smarter than everybody else, and they're the
Right.
only one that was able to see that unique need that everybody has, that they're the only ones that have it. And they also have this great bridge that they want to sell me too.
And when you put a point in the chat, I saw Damien.
Yeah. Well, Ian was talking about, the problem for a whole lot of AI firms is that they need enough money to be able to stand up all their AI servers. And
Right.
it's kind of back to the future of, when you used to be able to develop mainframe software and you needed to go through and get timeshare, or you're developing SaaS products, but before you had AWS and GCP or Azure, you needed to go through and stand up your whole data center. And one is you needed the capital to go through and buy a bunch of racks of servers, but you also needed to be able to have the operational capital to have fast internet to go through and share that as well too. So it's an interesting cycle as to where capitalization is and how fast or how much capital you need in order to spin up a business these days. I would generally stay still far less than traditional manufacturing.
Yeah.
And then you end up with regulated manufacturing or silicone manufacturing, which has really high moats around it. So there's models that are out there. We can go through and look at silicone, anything that's chip based. We're still looking at years to be able to go through and get something up and going. And again, even Detroit still looks at their standing up in long term. I think that's part of why Tesla is walking away from selling cars and looking to shift their sights again, because they can basically go through and keep selling um, products that are under development to everybody and just say, well, we'll fix it in the software next quarter. But buy it today and give us the capital.
Right. So next question or point. Nobody?
Oh, so I've got it. So, Sally, can you tell us what sectors you're most excited about right now that you would like to invest in?
I get excited about a lot of different things. I think with my background, it's definitely a little bit about it's definitely companies that are disrupting enterprise world. So I do look at a lot of enterprise companies and B2B2C companies because I am interested in how the evolution of SaaS and software will play out. And that it's also a lot of my background too in terms of helping companies with go to market into these spaces and like their overall strategy. And I have a very strong understanding of how to bridge these type of customers with these types of startups. So that's where I get excited. It's pretty broad enterprise software. What I do find really interesting about these companies are the ones that have a lot of strong user-led growth where um, just like teams of people will start using them internally and no longer having to sell to maybe the traditional channels of like I don't know the IT department with the CTO or so I do those are the companies that get me really excited where um, the developers are finding these solutions and then creating this mass adoption across the organization. And that oftentimes is like, yeah, without really knowing what the technical parts of the product, that's just a strong signal when there's users that are like so excited about it, have testimonies, are completely changing the way that they work, completely changing how the operational efficiencies of their teams or businesses are.
I guess Anthropic would be like a case in point, Claude, in the sense that as you say, it's kind of being adopted from the ground up. Like a lot of developers and other people are very excited about it, and that's kind of seems to be pushing companies to adopt it, and it seems to be, influencing investors quite a bit too. So, yeah. Uh, yeah. Do you use AI yourself in your daily work?
Mm-hmm.
What do you do with it?
My team is very, or my company is very bullish
Okay.
on AI. So yeah, we use it for research, we use it for diligence, we use it for different workflows. We create a lot of our tools at the company. There's a big encouragement around like vibe coding and creating your own tools, all around the goal of being more productive and working smarter, and driving better deals into the organization.
And that's
So it is working for you,
Yeah, I use it every day. Everyone on the team has like an enterprise subscription to OpenAI. I think we also have now Claude. So everyone's sort of like given the um yeah, like a little bit of the toolkit and encouraged to use the toolkit.
Right.
And I'm hearing this from VCs more and more, especially when it comes to
Yeah.
vetting Yep, absolutely.
Yeah, and a lot of VCs have their own AI teams, data science teams.
Yes.
Like a lot of them are having technical colleagues on the team now, and their whole job is to like spin up new tools for both of them and for their portfolio companies. So, I mean, we have a CTO, we have an IT team, we have all of that. We have all of that too. Um, and they're working on different things for different teams.
So then, of course, there's the human side. Where does that leave the analysts, the younger analysts who are coming in?
We're hiring a lot of juniors
Oh,
that
wow.
have computer science backgrounds
Right.
to be our basically human AI agent amplifiers. So yeah, the junior people that we're hiring now are not the type of junior people the firm was hiring like 2 years ago. They're different.
Yeah, I wondered about that because they're not strictly analysts. They're coming from the computer science side, as you say.
Yeah, that's much more of an emphasis than someone who's worked in venture before.
Right. But where does that leave next generation when you're not looking for junior analysts, but some people with more experience, and they can't get it because they're not being hired right now?
There's ways for them to ramp up on how to use AI that maybe not taught in school as prevalently. They can, that's a lot of, I think that's like the last generation of developers too. A lot of them learned on their own. A lot of them are self-taught developers. So this is just another form of, um, if you kind of, you're junior and you want to succeed, this is the tool. This is kind of the skills you need. And a lot of it needs to be kind of figured out and done on your own. You don't have to be like so proficient. but it helps that you come in and you can be adding something to the team instead of the team having to like spend time and train and onboard a junior person because people don't want to really do that anymore. They want someone who, because a lot of the stuff that junior people can do that used to be relied on for can be done with these AI tools, like spinning up an investment memo. You don't really need a junior person to be writing these memos anymore as long as you have the content.
That's true. I don't want to dwell on the human side, but there are things that people with experience, having gone through the whole system, can bring that an AI can't do. It doesn't have that same human experience,
Yeah.
like intuition, like pure intuition. And I can give you an example if you'd like.
I've got to jump for
Oh.
another meeting.
Oh, okay. I know you mentioned that you had to leave early and you had a crazy day. So
Yeah.
I thank you so much. Any parting words of advice? I saw you were getting a little bit antsy, so I tried to get to as many questions as possible. Thank you so much, Sallie.
Thank you. Yeah. Thank you, everyone.
And thank you. Okay.
Thank you.
If you want to stop recording, Joseph, if people want to stay around a little bit longer, I can do that. Yes, Sallie emailed me this morning